Have you ever dreamed of passive income or building some real wealth through real estate, but you just feel totally lost on where to even begin? You're not alone. Forget that one-size-fits-all narrative, because today we're really digging into real estate investing strategies, not to find the perfect one, but to help you find your perfect fit. And welcome back to Invest with Seabass. I'm Sebastian, and I am a real estate agent specializing in investment properties right here in the greater Seattle area. Now, I'm still pretty new to the agent world and super excited to land my first big deal. My own investment journey so far has only been in REITs, so I do get how to start small and I understand the market. Today, we're going to break down some of the most popular real estate investment strategies for beginners, talk about what they are all about, and most importantly, help you figure out which one might just check all of your boxes. Real estate investing offers incredible ways to build wealth, generate income, and diversify your portfolio. But with so many options out there, from owning actual properties to putting money into big funds, it can feel a bit overwhelming, right? The truth is, there's no single best investment. Instead, there are different strategies, and they're tailored for different personalities, comfort levels with risk, and financial goals. My job is to help you gain clarity about what these paths are. Before we begin though, quick heads up. I'm here to share info and guide you, but always make sure to speak with qualified financial advisors, tax professionals, and legal experts before making any big investment moves. This video is here to get you started and educate you, pure and simple. Strategy 1, REITs. Let's kick things off with what's probably the most hands-off approach, REITs, or real estate investment trusts. Think of REITs kind of like mutual funds, but specifically for real estate. You buy shares in a company that owns, operates, or finances income-producing real estate across all sorts of areas. It could be apartment buildings, data centers, could be anything really. You can grab REIT shares just like you would stocks through a brokerage account. So the entry cost is actually pretty low, sometimes just the price of a single share, which might be anywhere from tens to hundreds of dollars. No traditional real estate financing is required. Returns usually come from dividends, since REITs actually have to pay out a big chunk of their taxable income to shareholders. You also get the potential for the share price to go up if the value of the REIT's properties or if the company itself grows. Annual returns can swing quite a bit, but historically they might be in the 4% to 12% range depending on the market and that specific REIT. This is perfect for anyone who wants to invest in real estate passively without having to deal with property management. It's for folks who like knowing they can buy and sell shares easily. If you're already comfortable with the stock market and just want some real estate exposure without all the direct headaches, REITs are definitely for you. Their personal goals are usually to diversify their existing investments, earn some dividend income, or just get into real estate with minimal cash upfront. As someone who's personally invested in REITs, I totally get why this accessible entry point is so appealing. While REITs are hands-off, understanding the real estate sectors they invest in can be super beneficial. As your agent, I can share insights into local market trends here in the Seattle area, as well as nationally, that might affect the value of different property types, helping you understand the bigger picture to what you've invested in. Long-term rentals. This is the classic one. Buying a property, finding a tenant, and renting it out for steady monthly income while the property hopefully goes up in value over time. Could be a single family home, a condominium, or even a small duplex. You will need a down payment, usually around 15 to 25% for the investment properties, plus closing costs. Here in the Seattle area, prices can vary widely, but a starter rental might be anywhere between $500,000 to over $1 million. So we're talking down payments from $75,000 to $250,000 plus. My team can actually connect you with some excellent lenders who really get investment property financing. Returns come from your rental income or cash flow and long-term appreciation. A solid cash flow property might give anywhere between 5 to 10% cash on cash return annually. Basically, that's what you make compared to the down payment that came out of your pocket. Appreciation in the Seattle market has historically been strong, often anywhere between 5 and 10% per year. But that always changes. Total annual returns when you add in the appreciation potential could easily be 10 to 20% or more in a strong market. This is for someone who's patient, consistent, and okay with being hands-on with property management, or of course, willing to hire a property manager. You really need to have a long-term mindset. Their goals are usually steady passive income, building wealth over time through equity, and benefiting from the property appreciation. Even though I haven't closed on a personal rental property yet, my extensive research and market analysis skills are totally here for you. I can help you pinpoint high demand neighborhoods in the Seattle metro area, break down potential rental income versus expenses, and find properties that have strong appreciation potential. We look at things like cap rates, what other rents are going for, and vacancy rates to help you make your first smart move. Strategy 3. Short-term rentals. Think vacation rentals here. You buy a property and rent it out for short periods, often nightly or weekly. This can be a really lucrative strategy, but it definitely means more work. Pretty similar to long-term rentals, down payments of 15 to 25% and conventional financing is the standard. The property itself might need to be fully furnished, which does add upfront costs, potentially $10,000 to over $30,000 depending on how big it is and the quality. Location is absolutely and completely key for the success of this kind of investment. These can be much higher than long-term rentals, with potential gross rental income being 2 to 3 times what traditional leases would bring in. But your expenses are also going to be higher: cleaning, utilities, supplies, booking fees. Net returns can still range anywhere from 10 to 25% or more cash on cash, but do remember that vacancy rates can be a bit unpredictable and something you gotta plan for. This is for an entrepreneurial individual who enjoys being a host, is super organized and willing to manage bookings, guest communication, and cleaning schedules. Or someone who's willing to take that load off and pass it to a dedicated short-term rental management company. You need to be adaptable and ready for a more active kind of passive income. Personal goals here are to maximize income from a property, take advantage of popular tourist and business spots, and enjoy a dynamic investment. Understanding the local rules for short-term rentals in different Seattle area cities is so important. My research into these specific regulations means I can help you navigate these complex rules and identify areas with strong tourism and/or business travel demand that are also good fits for short-term rental operations. Strategy 4, the BRRRR method. This is a super powerful strategy for quickly building up your portfolio. It stands for buy, rehab, rent, refinance, repeat. You basically buy a property that's undervalued, fix it up to boost its value, rent it out, then refinance it to pull out your initial cash. And sometimes it's even more, so you can then go ahead and do it all over again with a brand new property. You will need some upfront cash for this kind of investment, often in the form of cash or a hard money loan, and of course for the rehab. Rehab costs are going to be anywhere between $20,000 for simply cosmetic stuff to well over $100,000 for bigger renovations or additions. The cool part is that after you refinance, a lot of your initial capital comes right back to you. For the rehab phase, you might use cash, private lenders, or a specific rehab loan. When you go to refinance, usually you will be using a conventional mortgage. This strategy can generate seriously impressive returns, often 20 to 50% or more on your initial capital, because you're essentially getting all your money back out. The ultimate goal here is often infinite returns on the equity you're pulling out. Plus, you end up with a cash flowing rental property in the process. This is for someone who's action-oriented, comfortable with renovation projects, enjoys problem solving, is strategic, and wants to grow their portfolio fast. This is for someone whose goals are rapid portfolio growth, building equity quickly, and keeping their out-of-pocket capital low over the long term. Finding undervalued properties with good bones is critical for the BRRRR strategy, and that's a sweet spot for me. My in-depth study of the BiggerPockets community and various real estate literature has really prepped me to help you identify properties in the Seattle market with strong after-repair value potential, as well as connect you with reliable contractors and guide you through the local permitting nuances that are so vital for a successful rehab. Strategy 5, the fix and flip. This is all about buying a property that needs work, renovating it, and then selling it pretty quickly for a profit. The aim is usually a fast turnaround, typically under 6 to 12 months. Typical investment costs and financing. Just like the BRRRR, you'll need capital for the purchase and rehab. Purchase prices and rehab costs in Seattle would be substantial, potentially $400,000 plus for buying a distressed property, and rehab costs from $30,000 to again over $100,000 to renovate that home. Financing often involves cash, hard money loans. Those are going to be short-term, higher interest loans, or private lenders. The goal here is a quick lump sum profit. Successful flips can bring in 15 to 30% gross profit on the entire project cost, but your net profits will depend on ongoing costs, closing fees, and how the markets are doing. It's high risk, but it's also high reward. This is for someone who's comfortable with risk, decisive, who enjoys managing projects, has a really good eye for design, and can accurately estimate renovation costs and market values. You'll need to be able to move fast and be okay with periods of some really intense work. Their goals are going to be generating lump sum profits, working on projects with a clear start and finish, and preferring to sell assets rather than dealing with any tenants. My deep knowledge of the Seattle market gained through extensive study is super valuable for flipping. I can help you identify properties with strong resale potential, understand what local buyers are really looking for in terms of finishes and layouts, and help you accurately price your renovated home for the best profit and the quick sale. Multi-family homes. This means investing in properties that have multiple units like duplexes, triplexes, or even apartment buildings. This can even include house hacking, where you live in one unit and rent out the others. For house hacking, living in one unit, you might actually qualify for FHA loans with lower down payments, 3.5%, making it quite accessible for beginners. For pure investment multifamily properties, down payments are usually 20 to 25%. Costs in Seattle for a multifamily property can be pretty big, ranging from $800,000 to several $1,000,000, so those down payments are significant, starting typically around $160,000. Multiple income streams mean potentially higher cash flow and quicker growth for your portfolio. Returns can be similar to long-term rentals, but with less risk from vacancies. If one unit's empty, you're still going to have income coming in from the others. Cash-on-cash returns might be anywhere in the 6% to 12% range, plus appreciation. This is for someone who likes efficiency, is okay with managing multiple tenants or having a property manager, and really wants to see larger portfolio growth. House hacking is awesome for people who want to live for reduced costs while getting started in their investing career. Their goals are faster scaling of income and their portfolio, diversifying their income streams, and potentially cutting down on their personal housing expenses. Finding well-located multifamily properties in the Seattle market requires some specific expertise. My dedicated research allows me to help you analyze the financials of different kinds of units, figure out tenant demand in various submarkets, and even help you with the due diligence on existing leases if you're buying an occupied building. New construction. This one means investing in the actual building of new homes, either by buying land and building from scratch or by purchasing units in a brand new development before or while being built. Buying land typically needs a good chunk of capital or special land loans. Construction loans are pretty specialized and require solid financials and a clear plan. If you're buying units in a new development, it often means a substantial deposit up front, with the rest due when it's all done. Costs vary a lot, but can easily range from hundreds of thousands to multiple millions for land and building in the Seattle area. New construction can offer higher profits when you sell, mainly because you're offering a brand new product without all the immediate maintenance issues of older homes. Returns can be quite significant, potentially 15 to 25% of your initial investment, especially if you get in early or manage the build process super efficiently. This is for someone patient. Buildings take time. Good at overseeing projects if you're managing the build. Understanding what's trending in the market for new homes and is okay with potential construction delays. Their goals are higher potential profit margins, offering a turnkey product to buyers, and building a property exactly to their specifications. So, you can really see the world of real estate investing is incredibly diverse, and there truly is no one-size-fits-all answer. Your ideal investment strategy is really going to depend completely on your personality, your financial goals, and your comfort level with risk, as well as how much you want to be involved. The most important steps for any beginner is getting educated and being prepared. Don't just jump in without understanding the landscape. Do your research, talk to people who've done it, and build your team. If you're ready to explore these opportunities, especially here in the awesome greater Seattle area, that's exactly what I'm here for. Whether you're just looking for your very first rental property, considering a BRRRR project, or simply want to understand the local markets for potential investments, please do not hesitate to reach out. I'm here to help investors just like you navigate the complex market, find the right properties, and make really smart decisions. My contact information is right there in the description below. I hope this video has helped demystify real estate investing for you and maybe even given you a clearer idea of where you might fit in. If you found this video helpful, please give it a thumbs up, subscribe to Invest with CBAS for more real estate insights and content, and hit the notification bell so you don't miss out on anything new. And hey, leave a comment below with your thoughts or what investment strategy resonates the most with you. Thanks for watching, and I'll see you in the next one.